The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Good morning, everyone. I'll be doing Basil's show at 11 o'clock this morning, setting in for him because he certainly helps me out when I'm out. We'll start out today like we usually do, which is the DAX chart. It's an hourly chart, and it goes back quite a ways, as you can see, and it does complete this broadening pattern known as the megaphone or broadening top pattern, the 1, 2, 3, 4, 5 pattern. And it does it with pretty good accuracy. As you'll notice here, these 1.27 numbers have been pretty much spot on here with this. Now, the problem that you have here is that when you're dealing with an hourly chart, you have to trade it as an hourly chart. You really shouldn't trade it as a daily chart or a 5-minute chart or anything like that. In other words, if you're trading a 5-minute chart, you should stay on that 5-minute chart. Just because you start with a big win, don't quickly look at dailies, weeklies, and monthlies, because that's not how it works. These patterns look differently on 5-minute and 15-minute and hourly charts than they do any other time. And to prove it to yourself, just take off the price and just take off the date and look at any chart, and no one could tell you what you're looking at. It's an impossibility. Even though they look alike, it's impossible. Well, sometimes you can remember some of them because of gaps or some crazy stuff, but most of the time you're not going to be able to tell what it is. So you want to stick with the same time frame that you're trading. That's a very important concept to remember. Now, we are, as they say in the trade, when the pedal hits the metal. Boys and girls, this is it. Let me just show you something that we have right here. I'll put it up here, and we'll take a quick look at it. This is the Dow Jones Industrial Average. And if you'll see here, you will notice that we have reached the, last night, we actually hit the 1.27 level. We were up about 25 points, I believe. That took us right to that 1.27 level. But what's important here is that we are right at a very, very important Bradley date. It is today. So keep an eye on it. We'll watch it very, very closely here. Also, look at the right under yesterday's low, you're going to see a thing called a GAP. You see that gap that's there? There's only 2 unfulfilled gaps on this chart, one way back in February on the 7th and another one back on the 13th of February. All of those other gaps that we've been talking about have been filled, except those 2. So that's where it's going. The question is when it's going to get there. But this one's going to be filled easily because this is I shouldn't say easily, but this one is an exhaustion gap, and all you really need is a move down, and then you'll see what happens to that. So keep an eye on this. This is very interesting. We have this along the fact that we had Stan Harley on last week, and we also had Bill Meridian on, and they're also talking about this crest that they think they're looking at here in the stock market, and they could be wrong, just like we all are at all different times, but watch it very, very closely. We've had a lot of questions, not a lot. When I say a lot, I get 1 or 2 emails, but to me that's a lot because that gives me time to prepare something for you guys for your entertainment. And if you'll notice here in the crude oil market, we have started to break down badly. We've now broken below the coveted $43 a barrel level. If you'll notice here from the weekly chart or from the weekly newsletter that I send out, Looks like we're heading down to the $41 a barrel level. We're not very far away, and we lost not a thousand, but we lost a dollar a barrel just in the early morning hours this morning. So you can see how quickly it can move towards these patterns, and there's a big ABCD down there. It had every chance in the world to try to make it, folks. It really did. It was doing everything necessary to try to hold it, and it held it for a day or so, but with no rally, which we discussed here. It was telling you that there was a great deal of weakness coming into this market, and it just continued to get worse and worse and worse, and then it just gave up the ghost, and that was it. So it's heading to $41 a barrel, and below that, you know, you're looking in the mid-30s. And remember, we were at 30 just a few years ago, and you can't say that it's not going to happen again. I'm going to go into trade management in just a second here, but I wanted to bring in something that we talked about a week ago, in fact, 2 weeks ago, because it's a weekly chart, and we want to bring this up this morning to let you take a look at it. This is the weekly chart of the Hang Seng Index from Hong Kong. And here again, you're looking at that head and shoulders pattern that we had in 2016, where the market had a very good correction. It dropped about 15%, almost making a 50% retracement, and then it's rallied up, and it's made a 1.618 expansion, and that is also a 78% retracement from the high that it made back in 2015. And we've been here for 3 weeks now. Last night, the Hang Seng was down about 1%, so it started to move in the right direction. Whether this is a major top or not, I don't know, but the pattern is there saying you got to be really careful being on the long side of the Hong Kong stocks at this particular time, just because of these numbers that are coming together. Also, if you remember, we were talking about the wheat market yesterday because we had so many numbers in the wheat market. This is really interesting, folks. Well, it's interesting to me because I happen to be involved with it a little bit, but let's just take a quick look here. This is what we were looking at in the wheat yesterday. We were looking for the market to get up to the 506 level, and the high had been 508. And the market closed at 501, so everything looked absolutely perfectly going in the right direction. And, you know, the fact that it was able to basically close unchanged on the day was actually a very good sign. And then there was a report right after the close of Chicago wheat coming out of Minneapolis that the Minneapolis wheat market had tremendous deterioration. It basically said that, boy, this thing is really, really bad, and the price of wheat is going to rally like crazy. So what happened was, and I'll bring this up to let you see it, here's the, I didn't have the last night. I get delayed prices in Minneapolis because I have not traded this but once in the last 35 years. But let's take a quick look at it here. You'll see this is the real bullish part of this market is when, if you remember, we had Rich Anderson a couple weeks ago, and he was saying this was really bullish because of the fact that it has such a high protein content. Well, yesterday, as you can see, the market had a what we call a hanging man. Excuse me, that's a shooting star, and it closed up on the day, but only up about a penny. And then after the close, the market gapped up 16 cents, and it gapped up exactly to the 1.618 level at 658. And what happens next? You'll have to stay tuned. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, going back to the story about the Minneapolis suite. I'm not in Minneapolis suite. I'm in the Christmas suite for Chicago, and that's the hard red winter wheat. And it opened 4 cents higher. It closed at 01. It opened at 05 and 06, and it rallied up, took out the previous day's high by a penny and a half. And remember, the risk on this, we suggested would be 5 cents. So your stop would have been right about 5.11, 5.12. It got to 5.10 and then dropped 10 cents in the last 2 hours before the market's supposed to open today. Now, it's closed at closed at $5. Let's try it again. It closed at $5 a bushel. Now, whether it's going to, maybe it gaps up, I don't know. But the fact with all that bullish news and the fact that the Minneapolis wheat hit the exact 1.618 number, that is could be pretty indicative of maybe this could be a substantial top in the wheat market. But we won't know that until today. And today is a long day. You got about 4 hours of trading in that wheat market, and anything could happen. Now, the next thing I wanted to talk about is about trade management. Here's something that one of our listeners did yesterday and asked me some questions about it. And this was the chart that he was looking at. He was looking at this 1-3-5 pattern that we like to see. As you can see, the cycle here on the left side is 1, and then 3 is in the middle, right at the 61% retracement. And then you've got another retracement coming in. Also, that's basically 64 hourly cycles because it's a 60-minute chart. So you cover several days. You're looking at 3 days each time you're looking at that. So you have an uptrend. You have two ratios coming together in an uptrend, so you certainly have defined risk. And if you'll notice here, the market started in the favor. Now, after 3 hours, right before I hit the sack, I took a look at this and I said, I think I better send this out because it's been up for 3 hours, but it's not up very much compared to the other cycles. And so I think that's what we probably should do. And I happen to not even be in this, but I was doing it because of something else. And we got a caller in. John from Philly, stay with me, buddy, and I'll be ready. I just want to finish this little tirade that I'm on, and I wanted to show the folks how I handled this. And we'll take a look here, and you'll see what happened was Mr. Carney, Mark Carney from the UK, came out and said it's not time to raise interest rates yet, and boy, that put the British pound into the sewer, and it's continued to go down. The good part was it made the first profit objective at the 382 retracement right before the break, and then the other one, if you had 2 contracts on, it would have broke even. John, are you there?
I am. Thanks for taking the call, Larry. I'm calling to ask you about the bond and the note futures this morning ahead of the stock market open, please. Just for what it's worth, I am looking for the 10-year note and the bond futures contracts to be in the area where, if they're going to make a turning point top, this is one of the candidates. And we don't have any proof of any top. We have had very strong bounces since that March-December double bottom in both. And I'm wondering if you could pull up the note contract and the bond futures contract. And I'm just observing there's a bit of a difference. Namely, the note contract ZN made a high last Wednesday, and is not far off the high, but it's backed off. So the pattern looks weaker. The bond futures is right at the high of last Wednesday, and I'm wondering if that says anything to you, and if we can get a clue whether or not these are topping short term, please.
I think they're topping short term, and the thing we have to remember as traders is the fact that even though we don't trade notes as often as we trade bonds, the notes is the largest of all the futures contract we traded by far. I think it's probably 7 or 8 to 1 bigger than anything else. So it's a monster market because that's where we get our mortgage rates and our credit card things and auto rate loans and stuff. So that's the biggest one. The fact that it's weaker, to me, tells me that it's more of a topping action. And the fact that it stopped right at that 382 level at 127 and change is also is important. Now, if it closes strongly above 127 in the September notes, then I would have to say, well, it might have some legs to take it a little bit higher. So right now, I would say it's in a topping process. I'm actually surprised that there's this much action in the notes and bonds this morning because of the fact that stocks were so strong, and usually they usually go opposite. Lately they have, but anyway, we'll see if that's going to happen today. But that's the numbers that I'm looking at, just a little above 127.16 in the Treasury notes.
Very good. Is there? Thanks for putting up that weekly chart. Is there anything that you're seeing when you look at your hourly charts on either of those that would be helpful to comment upon?
Well, the only thing I can say, John, is the fact that we have been in a really tight trading range for 8 days. I mean, we really have. We've been just sitting here between 156 and change and 155 and change for, I think, 5 days. I mean, so it's just been bouncing around up in here, which means it usually hasn't made a top yet. In other words, I'm expecting maybe one more little jab, to take out some stops and then to see if it'll roll over at that time. But it hasn't made a top yet because it hasn't backed off.
Well, I want you to know your hope. If you're hoping for a push to new highs to run some buy stops, protecting shorts, I'm afraid I'm going to be one of those that's going to get stopped.
Well, I'll be right there with you. So anyway, it'll always give us another chance. There's always a few frogs. There's always a few frogs around the pond. So we'll find another one.
Very good. Thanks so much.
Hey, thanks for calling in.
Great. Bye now.
You bet. One of the advantages of being here in the Tiger Den is you have some guys like John from Philadelphia, who's a very, very experienced trader, has been around for a very long time, and he shares so much great information. And he shares all of his trades in the Tiger Den, which is really nice. He shows the entry, the stops, profit loss, the whole thing, and he does a great job. Okay, now we have another question about the gold market. Folks, the gold market is beginning to look exactly like the crude oil market. It just doesn't have any friends. It really doesn't. Yesterday, if you recall, we were looking at this area to come in around the 1247 level. We got down to 1244, and we haven't been able to rally higher than 1248.5. I mean, this is not the sign of a bull market. It really isn't. I mean, there's a few signs out there, but believe me, there's so few that it's it's like grasping at straws, and that's not a whole lot of fun. Let's take a look here at one of the things that is also. This is the XAU, which is the gold silver index, and you'll see here that it's also at a 78% retracement, but it actually closed down on the day, and that was not another good sign, and it's a penny or two below it, so that's not good. And if we take a look at the silver market, silver hit the exact 618 yesterday and hasn't moved either. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I wanted to go back into that trade with the British pound when we had the 135 pattern. Folks, when you're trading currencies or just about anything else, and the market gives you, let's say, $300, you have to realize, even though you haven't booked that profit, that is still your money. And it's very important to keep in mind that it's really your money. And so once you're ahead 30 or 40 pips, you have to realize that, well, if I lose that 30, 40 or pips, that's part of the risk that I was originally taking. So if you're taking 40 pip risk on something and you let it go 40 pips and then let it come back and stop you out, you've risked 80 pips, and that's not the way to do that. You've got to go in and be able to pick a spot to say, okay, I've got to come in and use a trailing stop or protect myself a little better. And believe me, you're going to get stopped out a few times, but it's going to save you a great deal of money. Now, where people really lose in this business, the two ways they lose the most, number one is they overtrade. They trade 10, 15, 20 times a day. That's just flat out suicide. You might as well throw your money out in the street and let the truck run over it. But if you're only trading a couple times, 3, at the most 5 times, it's about the most I ever make in a day, and that's very unusual to make 5 trades in one day. Usually it's about 3, and I can handle 3 without too much trouble. And believe me, I don't like to stare at the machine, so that's another thing that keeps me from getting in too much trouble. But if you overtrade, you'd have a tendency to make more errors, and then you'll look for things that are not even there. Now, the main reason most people lose, especially beginning traders, is they put their stops too close. They try to trade for $50 or $100, $150. Folks, the market has a lot of harmony in it and a lot of synchronicity and symmetry and stuff, but it's certainly not perfect. And the farther you get away from the daily chart, as you get out into 15-minute and 5-minute and 1-minute charts, you get a lot of flutter in the market. And that's what'll get you sometimes, is those little small swings that you have. So if you're trying to risk a very, very small amount, I highly recommend to try a different approach, because that's not going to that's not going to help you most often. That's the real key, to really looking at what's going on with this thing. So keep in mind that it's very, very important to be watching that. Now, that's the main thing to be, focusing on, in my opinion. Now, we've been as low as $42.93 in the crude oil. We've got another $2 a barrel to go lower, and we haven't had any rallies. We couldn't even rally $1 a barrel after we made that 3 drive to a bottom pattern. We were only able to rally 90 cents. And then once we broke, the 44.50 level, that told you that it looks like we're heading down to the $41 a barrel level. And I'm not even sure that's going to stop. So keep a close eye on that one too. Another one that's on our radar and is getting really close, and you have to have a lot of patience for it, and that is this Canadian dollar, because the Canadian dollar is another one that has got a great deal of harmony to it. I mean, it's just got some beautiful patterns coming together. We'll take a quick look at it here. This is showing you that we have a beautiful pattern coming in at the 131.50 level. That's also a perfect 135 pattern, just like we looked at in the British pound. And of course, the British pound pattern worked for 4 or 5 hours, and then with Mark Carney coming out saying there was not going to be any interest rate increases, that pushed the British pound a lot lower. You don't have any control over what that dude is going to say, or any other dude or dudette. So you just have to keep your stops in and trade using defensive trading. Be careful with your losses. Those are the things you got to carry. Don't worry about the profits. They'll come to you, but the losses is what you have to be aware of. And your first loss is your easiest loss, because if you keep trying to hope that the market is going to turn, you're in big trouble, folks. Hoping doesn't work in trading. It works in a lot of other things, but it certainly doesn't work. It doesn't work in trading. However, getting back to this Canadian dollar versus the U.S. dollar, you can see we have a really nice ABCD pattern. The BC swing was exactly 382, just perfectly spot on, and it's got every indication that it wants to get down there just a little bit lower. We're still trading in the 132 range, but I believe we got that another 50, 60, 70 pips to get down there. And we'll see if it's going to make the 131.50 level. If you'll look back in February, you'll notice that it tried it once, it had a big rally, and then came back and hit it 2 weeks later. So you have to be really patient. These numbers are so accurate, at least in my opinion, these ABCD and these butterflies and Gartleys, they're so accurate that if you wait and have the patience to do it, you'll be far better off. And believe me, patience is not something that is, it's not a gift, folks. You have to earn it. And the best way I've told folks to try to learn patience is that if you're staring at this machine all day long, which I certainly don't think you should, the one thing that you should do is practice staying away from it from 15 minutes. In other words, put your trade on and don't look at the trade for 15 minutes and then come back and look at it. Now, you can put an alert in that if something hits, then you're going to be able to see if it's going to help you. But if you do it over a period of time with baby steps, in other words, wean yourself away from it, 15 minutes and then a half an hour. I'm up to a half an hour, and that's after a long time. But every half hour I'll come in and I'll check to see what's going on. But I do have alerts going on, and if they hit, then I come in and take a look at it. I do other things. In fact, one of the things that I realized that I did is that I'm getting ready to do this autobiography of myself tomorrow, and I have written 200 pages over a 30-year period that I've kept in a little folder that I ran into just by accident. In the back of my mind, I thought I had something there, but it had a lot of stuff in there that really had brought back a whole lot of memories that I'm going to be able to share tomorrow, some of the experiences. And I'm going to try to relate them, to trade. Some of them are personal, of course, but a lot of them are trade related, of how I learned things and how I, should have learned things faster than I actually should have. But those are the things that we'll be covering tomorrow in the show, and I think it's going to be a lot of fun for me because it brought back a whole lot of memories. I see we just made the 156.01 level in the Treasury bonds, and I believe that we're getting pretty close to a they have to break. I see they took out yesterday's high and really didn't go anywhere. And there's an ABCD up there at the 156.01 level also. So that's another one that's going to be interesting, to keep an eye on. So I would watch this very closely. What I'm watching in the bonds, folks, is, as I mentioned before, we've been here for 7 days, not just 5 days, but we made a high of 0.5 way back when. We're trading at 0.3 now. We're almost sure to take that out, and that's going to take you to 105. 156, about 156.8 to 156.10. I will wait to see if it gets above that level. And let's just draw this in. Hold it. You're not able to see this, but I am. Just give me 1 second to draw this in to make sure. Wow, this thing is so sensitive that I just can't get it right. There we go. Hold on, cowboy. There we go. We'll take a little break here. Yep, I'll be right back. It's 156.06. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and I've posted the chart of the 30-year Treasury bond up at this 156 level. If you'll notice, the old high we made back there just a few days ago was 156.05. We've been to 156.03. But, boy, if you take a look at the Treasury notes, they are really lagging the market. So if you want to sell one, the Treasury note would be the one to sell. It's the weakest. And the rule is you want to sell the weakest and buy the strongest. So that would be the one that I would consider you take a look at, because it's very interesting here with this divergence that we're having. But we're up against some major support here, resistance, and we've been here for a week. So we'll find out whether we break out to the upside or not. If you're going to do this, you certainly don't want to see it above 156.15. So your risk on this would be about $350 if you're looking at the bonds, from the short side. So keep a close eye on it. We got the gold trading at 1245. It's still, like I mentioned before, it just doesn't have any friends, folks, and it actually looks like it wants to go a great deal lower. The crude oil is trading below $43 a barrel now. We're trading at $42.99. The target on that comes down to 41. And so that's $2,000 away from where it is. So unless there's some type of a miracle going to be happening, with the crude oil market, it looks like it's heading down to that level. And that doesn't mean it's going to stop, because a lot of times, these patterns do fail, and you want to be, extremely careful, of course, as always, in everything that you trade, because, you don't know what's going to happen next, and nobody else does either. So you've got to protect yourself. And that's foremost thing that you have to keep in mind, because if you don't, nobody else is going to. That much I feel pretty strongly about. All righty, we want to move on to something else, and I wanted to mention yesterday that someone talked about, and that was about the price action going on in Amazon yesterday. Oh, I hope I saved the chart. Please tell me that I did. Shut the front door and raise the rent. I did. Hold on one second here. I wanted to show you this because this is extremely important. This is where we had a situation where hold on one second, I'll get this up here. You'll see that the Amazon opened on the high and made a new high by 20 cents from the high it made back in June. Folks, that's a $1,000 stock, and it can only make it high by 20 or 30 cents. Are you kidding me? And then it broke, well over, it actually closed at $9.97, so it came down $20 from its high. Now, the NASDAQ didn't, but the leader of the pack did. Now, whether that's a sign that the leadership is rolling over or not, I don't know, but that is not good market action. That much I can tell you. To open on the high like that and reverse is just not the best way to expect the market to continue higher. I don't know where Amazon's trading this morning, but it closed, I believe, at $9.97. And unless it takes out that $10.17, to me, I think we've made a pretty good top here. It's trading at $9.96, so it's basically nothing. And we'll see if it's going to turn around. We've had another question about this crude oil. We're also getting indications, from the heating oil market and also from the gasoline market, which seasonally is supposed to be the strongest time of the year. They're not acting well either. So it looks like the crude oil market is, continuing to the downside, and it's doing with gusto too. That's the main thing. And the gold still looks lower. I believe we're going to get down to that 1235 level to see if it's going to do anything. And if we break below the 61% retracement here, 78% retracement in the silver, if we get silver below 1640, that's heading down towards much lower prices also. So these are things that you want to keep in mind. These numbers are not perfect, but they lead you to the promised lands, to see if it's going to do that at all. The most amazing thing to me today is we had this big gap up in the Dow Jones yesterday and coming in right at a Bradley date. And this is a key Bradley date, folks, because you can see that for the next 5 weeks, it's basically supposed to go one way. Now, maybe it's going to invert and just blow off to the upside like it's been doing, but the patterns are such that, and the gaps are such that telling you this should be some type of an exhaustion move in this, and you want to be prepared for it if in fact it does turn around. I'm also amazed to the fact that the VIX index did not fall out of bed. It's still trading above 10, even with the Dow up 130 yesterday. The VIX index barely gave up anything and couldn't even take out the previous day's lows. All of that's telling you that, boy, there's something, something is just not right. That's the way it looks. Whether it's going to be that way or not, I'm not sure. But, that's the way it looks like from the cowboy section of Arizona, which we have today. We're going to have a balmy 111 degrees. Our hottest day ever we had here was July 28th in 1995. We hit 117, I believe, was the hottest we ever get. People just don't go out in the afternoon when it's that hot, folks. It's silly to do that. And so the best thing to do is to do your errands early in the morning, and and then in the afternoon you just take it easy on the inside. Or most people don't even go to a movie because it gets so hot that it's really unbearable. And everybody jokes about it being a dry heat, but believe me, it's still hot. And we'll have our monsoons coming here anytime now. We get monsoons starting on June the 15th that go through September the 15th. And we get rain almost every day in the morning or afternoon. We get a real heavy rain, and then it dries up, and we still have a warm day. It's a little muggier, but it cools it off. And we even get so much rain that sometimes our river out here gets a little bit of water in it, which is highly unusual. When I first moved here, there was water in the Ryuto River almost all the time, but not anymore. It's just too many people out here using too much water. Okay, let's take a look here at a couple of these markets that we're watching. The Canadian dollar, I'm really having that on my radar, folks, because I think that's got a chance for a really good move if we get down to that level. We're trading at, well, we had a pretty good rally last night. I didn't see that. We got up to 132.75. The low we've had so far, yesterday we got down to 131.85. That's within 30 pips of the exact low that we're looking at. Now, I don't know if that's close enough or not. I don't think so, because when you look at these numbers and you go through the old charts, they're pretty much spot on. So I think we're going to travel down there one more time to see if we can get that stop. But whether we do or not, remains to be seen. But that's certainly one, on my watch list. Also, the euro, I believe our euro is still heading down. We're going to get down. I think we're going to eventually get to par, but not right away. But we've made a major top up here at that 112.90 level. That was we had so many numbers coming up there at that point. It was really, quite interesting to keep an eye on that one. So watch that one very, very closely too. Now, someone just Skyped me. The weather, what they're expecting in Chicago, the grain traders there, and believe me, all the grain traders all over the world, they're not in Chicago anymore. But they're thinking that this hot weather that we're having in the Southwest through Texas and all this is coming into the Midwest. I don't think so. Not at 110. We'll see. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I want to end the show with a chart that's worth 1,000 words. We've been talking about bonds and notes. If you'll notice here, the blue line is the Treasury bond. And look at the Treasury notes, folks. This is the largest traded commodity that we have. And it is lagging badly. I mean, it's 3/4 of a point from the high, whereas the Treasury bonds are within a tick or two. Now, is there going to be that much of a difference in interest rates between long rates and short rates? I don't think so, but look at the difference in these charts. Look how the correlation is incredibly precise. And yet, over these last few days, there's been a monster divergence. Now, whether that's a short covering rally in the bonds or not, I don't know, but it's something that we ought to pay attention to. This is a huge divergence. Maybe more information will come down the road to tell us what's going on, but this is big time stuff, so we need to pay close attention to us. And we want to thank our good friend Mr. Z and Philly for bringing this to our attention, the fact that we're having this big divergence, because it certainly must mean something to what's going on. We have a slight sell-off in the market this morning, nothing to get excited about, but remember, we do have that gap in the Dow Jones Industrial Average from yesterday. In addition, the fact this is a very strong Bradley date coming in here, which is pretty important. So we want to watch these as we go through our trading day today, just keeping in touch with everything that's what's going on so far early this morning. We just took out those old highs at 05. That's what we matched it. Excuse me. They were at 05. We should make a new high in the bonds here very shortly. There should be some stops up here at this 156.05 level, but we'll watch it a little closely because it's in the area where it should take those stops out, and the notes are lagging so badly. I mean, maybe this is a valid breakout in the bonds, but I would be highly skeptical of this one. So watch that for sure. We're trading at 156.05. There's got to be stops here. Maybe they'll hit them before we go off the air, but we'll see. Anyway, keep an eye on that, because if they get to 156.15, I'm full of baloney. There, we just took them out. 156.07. 877-927-6608.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.